Hi folks, welcome to today's Bobcast. I'm Bob Benny.
I'm Jessie Thompson.
And we're both certified financial planner professionals with Bob Benny Wealth Management right here in Lincoln. And today's topic of our Bobcast is just taxes on different kinds of taxes at death, right?
Mm-hmm. And so kind of the theme of our last couple Bobcasts has been transferring your assets when you pass on and what that entails. And so one thing that a lot of people don't know or have a lot of questions on is how their stuff will be taxed when they pass away, or maybe they have a parent that's getting elderly and they're wondering, well, if I inherit all this money, what's that going to do to me?
Yeah, they think that there might be really big taxes, and sometimes there are. So the first thing we're going to talk about is federal estate taxes. Federal estate taxes. But the first thing right off the bat we want to tell everybody is there's an exemption amount, that there aren't any taxes if you're under a certain amount of money. And that certain amount of money right now is almost $14 million per person. Mm-hmm. So that'd be $14 million for a person, for a single person, $28 million for a married couple. So
what's included in that is not only everything that you leave to your beneficiaries upon your death, but it's also what's included in there is everything, every gift that you have given above an exemption of amount every year, I think of $19,000. So if you've given large gifts over your lifetime, that's counted also in this.
Yeah. Also,
exemption amount.
Proceeds from life insurance settlements are also included in that total estate. But for most people that we run across, they're not in that 14 million or 28 million for a couple range anyway. Then there's also in Nebraska, a Nebraska county inheritance tax. And that is taxed on the amount of money that for each beneficiary has a $100,000 exemption. So like in my family, there's 3 kids, or I have 4 kids. So there's $400,000. The amount above $400,000 that they inherit in Nebraska is taxed at 1%. If it's people that are not immediate relatives like children or grandchildren, then it can the rate of tax can be higher. But that's a county inheritance tax, and usually there isn't any way to get around it, and just be thankful that it's only 1%. So then beyond federal estate taxes and county inheritance taxes in Nebraska, there are taxes on the investments. Mm-hmm. And so like for instance,
it depends on the type of investment, the way that it's taxed. So if you have what you'd call like a regular brokerage account, or real estate works this way as well. We call this non-retirement money.
That's what's called a capital asset.
A capital
asset. You paid this much for it, and now it's worth this much.
When you paid for it, you established a cost basis. As it grows and gains value, maybe you die and it's up here. Well, the great news about passing on those assets is that whoever inherits those assets, on your date of death, their cost basis gets stepped up to whatever the value is on your date of death. So the amount of taxes, if they decide to, when they inherit it, turn around and sell it pretty soon after they inherit it, the amount of taxes that they're going to pay is not going to be very much. And it's usually long-term capital gain that they get to pay on it if there is a gain in it. Yeah. And so that's a advantage.
Yeah. If the person with this asset that they bought, say a farm or a stock that they bought here and it went up to here, if they sold it the day before they died, they had to pay capital gains taxes on this gain. Mm-hmm. If they die and it gets sold the day after they die, nobody pays any tax.
Yeah, it's a good deal.
Yeah, good deal. And so then we have, go ahead.
And the next type of accounts that we have are retirement accounts. So, well, particularly an IRA, or if you still have money in a 401k when you
Right.
pass away. Every penny of that money, when it gets taken out, whether it gets taken out by you or whether you die and it's not all gone yet and it gets passed on to somebody else, when it comes out, it's fully taxable at regular income tax rates. And there's different rules for different types of beneficiaries on how soon they have to empty the account out.
Yeah.
And that's a little bit complicated. We're not going to get into the weeds
Yeah.
on that right now, but when they take the money out, all of it is taxable.
The good news is usually they don't have to take, always, they don't have to take all the money out right away. So if somebody dies and they have a great big, say, $500,000 or $1 million IRA, yeah, it's going to be taxed, but it doesn't all have to be taken out that year and taxed at the higher income tax rates.
And Roth IRAs are particularly awesome. If you leave somebody a Roth IRA, it's not taxable. None of it is taxable.
Tax-free.
Tax-free.
Then you have the other type of investment, if it's okay to go on. The other type of investment are tax-deferred investments. Usually these, what we're talking about here, are either fixed or variable annuities, where you've put money in and it's grown in value, and you haven't had to pay taxes. The taxes have been deferred. When you take money out while you're alive, you have to pay taxes on the amount that's been deferred till you get down to principal. Well, it's the same kind of deal for the beneficiary. When they inherit an investment that's been tax deferred and they inherit it, they have to, at some point, pretty soon pay taxes on that tax deferred growth. So
Yeah, so it's not like, even though it's technically non-qualified, non-retirement money, it doesn't, those types of investments don't get a step up at your death.
right.
So
there are different kinds of taxes. There's estate type of taxes. There's investment taxes, and our goal is to help you work your way through this jungle of taxes and minimize them for you, and help you understand everything and make the right decisions.
and help you transfer your wealth to your kids in the most tax efficient way as well.
Absolutely. So.
All right, if you need any help with that, you can always reach out to us, Jesse at bobbenny.com or bob at bobbenny.com, and we hope you have a great day.
Have a blessed day.
Thank
Thank
you.
you.